Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Monday, July the 1st, 2024. Well, not that I feel like I've spoken too soon, but boy, was it just another day that I really felt, okay, all of this posturing back and forth and piling into one stock and piling out of another stock and going on, I thought that was over. As of last Friday, at least in the greater extent as it has been occurring for, say, the last couple of weeks. In any case, that did not happen. And we saw funds being poured back into Apple, Amazon, Broadcom, Microsoft. Microsoft took off today. And also NVIDIA, back and forth, but Tesla also took off today. Now, but as I have been discussing and as I have been showing, that the market it contains or still is presenting on our longer term charts a technical, so they'll be combining the technical indicators with the moving averages, still setting this in a buy. And if we break it down and we're looking at Apple individually or maybe even Tesla, Tesla still had room as of Friday's close that it could get up to pretty much exactly where it's gotten to, between like 209 and 211. And it's gotten there. But it still has potential. It could go to 224. Now, this is just all technical. So that then keeps a little bit more positive spin on the NASDAQ. Now, I'm starting here on the hourly chart because what's going to happen is this particular update. By the way, I'm working on switching some things around. And so this particular update will be attached to the trade room. And within the trade room, we, of course, will be trading, day trading. So the hourly chart and on down are for day trading. So whether you choose to come into my trade room or whether you just want this type of analysis, there's going to be for day trading. So again, starting on the hourly chart, I had felt that we are and still have marked as such that we likely completed that minor third wave at last week's highs, and we've started our way down on a fourth wave. Now, as I also mentioned over the weekend, that there is the possibility still, or the potential that, and I'll tell you why, because all these internals are threes. Now, you notice today how I kind of put a boundary around them, because there's, what if this particular 5 ends up being a 3, and so this ends up being a 4 on the minuet degree, and we're going to go up and finish minuet wave 5 and break above that high, which again we didn't do on the futures basis, which is 20,371. We did do it on the cash basis. So again, cash basis, I look at for more of that bigger picture, and I believe that's going to remain the same. So in any case here, what we're now dealing with is the potential. And I even mentioned that if we were to go into a triangle form, structure here, it would likely be a fourth wave and would come in real shallow. Now, I will share with you, there's a possibility they'll just stretch this out and it'll stay in this sideways range bound and come all the way out and end up being a fourth wave. Totally. And again, being up this high, I'd have to drop it down a degree and talk, that it's not, a fourth wave of minor degree or even a fourth wave of minute degree. I'm pretty satisfied with how the minutes counted out. So it would have to come down to a minuet degree. And so here we are. A, B, C, we get a D, we get an E, and then we launch and go up. Now it's Monday, hourly chart. Well, we could do A, B, C, D, E by Wednesday. And then launch Wednesday at some point, or Thursday and Friday, get up here, then begin. So let me just say that my expectations remain that I am thinking this market needs to pull back, not just the S&P, but the NASDAQ. Excuse me, not just the NASDAQ and the S&P, but the Russell, the Dow, all of them. But the Dow, being up as much as it was and then coming back down and then climbing back up, it's almost just watching. Someone said to me, institutional desks, that have the funds that they have to work, they have to put to work, are moving the market as much as they are. And again, let me just point out, this type of movement, when I'm sitting there watching the bond market be down over 2 points, that's like, okay, are we paying any attention to maybe what the bond market is starting to feel? If there's something up. And again, just watching a lot of the different markets and how they're reacting. And then here's equities. Well, we're just running them. Artificial intelligence, let's just run it. And so again, I felt that would be done. It wasn't. So the best I can do right now on an hourly chart is saying it's an ABC. The next chart down would be the 15-minute chart, and we can take a look inside of that and bring it down. And there's the A, and there's the B, and now we're inside that C. And you can see clearly threes throughout all this mess. A bunch of threes. And then here, okay, so what then, somebody asked, what then is that? Well, 1, 2, 3, 4, 5. Wow, we get our first 5 waves up. But it's then going to be 3 and then a 5. And so it's a 5, 3, 5, but still then it's a D and we still come back down. So in other words, we're getting both forms and all within what would end up being a flat. All right, take this back out to the hourly and it becomes a flat, a big flat. A, B, C, D, E. It's all within a range. So it's a flat, but then it turns into a triangle and it launches off that low. Right? Lower high, higher low. And then we'd expect the D to put in a lower high and the E to likely put in a higher low and then launch, if indeed it's a triangle. Moving averages, well, now we're on this hourly chart. Let's take a look at them. Tangled up inside of each other, but still the majors, the 50 and the 200 flat. So when and if you would to go over and you're just going to look at the collective of what the market is telling us, I want to tell you we've gone from strong sell to neutral today, just in today, to neutral. And so this kind of also tells me that when we combine these and we just put them together as a technical analysis view, well, we've gone neutral, from selling to neutral. And I think it's important to talk about that because if we're going to try to develop strategy, what the market, the expectations on that stronger sell was that we were going to start to break below the 200 again and then follow through to the downside. We initially did this morning, but then it stopped and they, boom, you saw it just bounce right off of that and they didn't stop. Because what did they do? They came in to some of these Mag 7s and pumped them. Just go for it. Now, regardless, I'm not going to try to pinpoint a reason. I don't care. I just think technically now we need to consider that we're just within a small 4 and it's taking time, and that what we're going to happen is we're going to get a D wave up and E wave down and then reverse up and out of this, breaking that high in the process. Now, whether the cash, how far above its current high, which it hit on Friday, gets, I don't know. So that I'll do over the weekend. The cash market gets updated, but I do check it, of course. Now, downside, what could possibly, the only other way, and I don't like it because I'd have to somehow turn this, what is pretty obvious to me, as a 3 into a 5. And that, not impossible, but boy, is it ugly. Boy, is it ugly. It doesn't really break any rules, it is not nice. It's not nice. So I'm kind of leaving it as it. If indeed this is an A and this is a B, and we're looking for a little bit larger C wave down to put in wave A of minor 4, okay, I can go with that, but it's going to be a zigzag, right? And does that necessarily fit? Sort of, but not really, because that implies that wave A is 5 waves. Could it be? Well, it could. Ugly, right? So that's my other point. When we're trying to employ Elliott as Elliott wrote it and put it together, we're into some stranger patterns. And I mean, we got all kinds of things, right? A, B, C, or, is it a big W and an X? And now we're going to come up in a Y and drop in a Z, and then we got the triangle going? Possibly. As strange as it all is. So, how do I want to leave this? The market is going to let us know. Further upside, we have what we would consider a D wave. And if I were to I'd put in this, and the D wave we'd be looking at 618, 20,000, let's say 20,100. Maybe as high as 20,175-ish, maybe. And then it goes back down. And then we'd be looking for that same type of a move, but higher. So lower high, higher low, and then a launch. And in the perfect world of triangles. Now, if by chance it goes A, B, 1, 2, and we're basically going to put this bizarre but possible diagonal going in the other directions, which doesn't fit at all because of how this is set up, right? Because it's not diagonaling, pretty much it's going sideways. But if we were to do that, what does it look like? Then we're putting something like this together. Back up to there. So again, 618, no problem. We take it off. And then we'd be looking at this. Again, I'm putting it in the color that it's likely going to be associated with for right now. And that's going to be here. So there's our support coming back down. So we still have ABC, right? So the C wave is still in progress. 1, 2, ugly, even uglier. 1, 2, that's what I'd have to do. But it comes off and it breaks, and then it breaks, and then it hits. That would be support based on these two. This leg, and then this leg. Internally, don't know. And and that's actually how I have to leave it. Now, is it day tradable? Yeah, it is, but you got to be careful because the market tends to sit and move sideways, then have a sudden move, i.e. this, followed by a sudden move, i.e. this, and then sit and do nothing and then do that. And when you're trading the future, it doesn't look like much here, but it is. These are 15, that's a 15-minute move, 15 minutes. And I can drop it down even more, and you can start looking on a 5-minute chart and realize, what does it look like? That's a 5-minute. There's a 5-minute. To be replaced by, a bearish engulfing to be immediately replaced by a bullish engulfing. So these are pretty strong swings. And if you're not playing them right, you could lose a bundle and lose a bundle. So I'm just saying, trading, I mean, if you catch it and you realize what the market is producing today, so you shorten your target, you keep a really tighter stop on the whole thing, because it can get out of hand real quick. So let me go back. So for tomorrow, let's see what it wants to do. We know it can have limitations to the upside and forming a D wave. Coming back down in an E would have the limitations of continuing to keep it inside this parameter. Now, what else could be happening? We got the C wave. It could be A of D, B of D, C of D. All right, so it's going to be a three wave. It has to be a three wave. So we come down, we go back up, we put a D on it, and we do another three down as an E. Otherwise, if it starts to break below this trend line, and then again below where we're marking C, then we have 19,625 to 19,225, all right in there as support. All right, over in the S&P, difference was it was even flatter today. And you can see this is going from last Thursday's, no, that's the 19th of June, putting in the high in the S&P. And this high came close, but not quite made it. So here we have an AB truly flat. And if we're working it in terms of a triangle, not a good looking triangle, but this is not really 5. So again, I got an ABC. So there's an A, B, C, D, E launch possible. So that just puts this over to here somewhere, and the 3 comes up to here. The 4 goes over here, and we launch. So remember, I did talk about it. The possibility that the S&P or both will put in a diagonal or just a triangle pattern for a 4th wave. And then I mentioned to what degree. I would not, because there's no true depth. 5585 to 5507 on a minor degree, nothing. It's not much at all. I'd be looking for it to be much bigger, as we have pointed out on the weekly update. We're thinking we go this far within a minor 4. This is teeny tiny, so it's going to get stuck that this 3 goes up and the 4 comes over. I hate doing it. I really do. But when the market is being that, I don't know the word to use, but it's not being very clear. It's not being very clean, even on a technical basis. Because here again, I'm just going to go over and I'm going to take a look at a combination of all of the technical indicators along with the moving averages. So here on the hourly, get this. On the hourly, our technical indicators and actually the moving averages were kind of in this strong sell. Well, after today, the technical indicators remain in a strong sell. The summary, though, putting everything together, moving averages and technical indicators, is neutral, and moving averages are now put it back in a buy. So let's take a look as to why the moving averages, right? Here we have it. They're erring in way of caution, because the 20's gone flat, the 50's gone flat, the 200's gone flat, and that's keeping that more in a buy, a neutral to buy. Because the potential for the market to continue higher exists. But because we're down here on an hourly, because it's day trading, what does it kind of could tell us if we're really just doing an ABC, we're going to do a D, we're going to stay within this sideways move, right? So we have the parameters set up there. And would not be looking for it to kind of break either up or down. It could break down and suggest that we're in a bigger C wave down. But then again, this part is like, what? Is this like 1, 2, 1, 2? But it just broke very slightly there, I think. So again, not clear pictures are being painted by how things are trading. So we must leave open the potential that the market's going to swing, go up in a D, come back in an E, and then swing again. But that one should be more thrust-like. So it likely will be due to news. And we do have, later in the week, we do have news that is going to move the market. I mean, tomorrow we have job openings, and Jerome Powell's on vacation in Portugal, but he decided to get it a paid vacation, and he's giving a speech over in Portugal. Then we have job openings. That could move it one way or the other. It could move it. Wednesday, we have ADP, initial jobless claims. That can move it. Trade deficit, that could move it. We have ISM, factory orders. So we have plenty of things coming out on Wednesday that could really shove this in one direction or the other. If we're looking at it being in this triangle, the shove in a direction, I think, would come to the upside. Let me explain. If we're looking at this going A, B, C, D, E, the shove is going to be to the upside as the market thrusts out of the triangle or the sideways, and then puts in a new high. So then we would shift our minuet degree. Now, moving out, if you're a long-term trader, you're listening to this, this is for day traders. So as far as I'm changing, your picture likely hasn't changed. Now, back to the day trading. Moving averages, flat as can be, and then we already saw how that affected the moving averages. And when you combine it with the balance of technical indicators, which is RSI, which is, it is ATR, it is MACD, it is the ultimate oscillator. All kinds of things get put in there. And then it gets averaged out, and you combine it with the moving averages of what they're basically saying, and then you get a technical reading. All right, now it's neutral. So there we have it again. How quickly that can change from Friday to Monday. We'll see what happens tomorrow. Again, that's kind of the plan. And by the way, I mean, you could run fibs in between high to low, and you're kind of looking for 618, maybe a little bit higher in terms of that's an A, a B, and we're going to C wave, probably up to 78.6. Breaking there would pretty much tell us we're likely going to go up to that, give a test to that 50 or 85. I would not be looking for it to break out to the upside without first coming, and finishing a D and then putting in an E. If it goes up a little bit and comes back down and then launches, then I got my C, D, E, go. So again, this has not been picture perfect, but giving it the best that I can. All right, I'm going to kind of finish it there to kind of hopefully keep this on a little bit shorter leash time-wise. And again, I went over what's coming out tomorrow in terms of economic data. And the next update will be on Tuesday, July the 2nd.